Okay, so Stefan, why don't you introduce us to this opportunity, what's going on, how long it's been around, and so forth. So we get a feel for it, and we know what where we're going with it.
All right, so can you guys see my screen?
Yes.
Yes.
So the original FICA tips tax credit's been around for a long time, but just recently we added in beyond 2024. So 12/31 2024, we added the beauty and personal care industry onto food, beverage. So that's been around for a long time. So that's been around. Surprisingly, not a lot of businesses know about it. So, and I think the reason why is like payroll services won't get behind it because they view it as a liability. They don't want to be in the business of telling businesses they should be taking a credit. They don't want to be responsible for what the credit is or how much it is. They'll tell them the information, they'll provide the information to them, but it's the client's responsibility to go get this money. And I think that's the reason why 80 to 90% of businesses, especially in the food and beverage industry, don't even know anything about this, much less the beauty and personal care, which we just added just recently. So anything beyond 2024, I mean 12/31 2024. So for the 2025 return, and remember, the way to get this money is to amend a return. So, or to file an original return. So, those in the beauty and personal care industry can, in the year 2025, file a tax return that includes this credit. And so, let me give you a little background what this credit is. So, this section 45B says that taxes, Medicare and Social Security, are not supposed to be paid on tips, employee tips, and it must be an employee. It cannot be an independent contractor. So, if you had a business and somehow you receive tips, that is not what we're talking about. It has to be employees. And so what's supposed to happen is you're not supposed to, as an employer, you're not supposed to be paying Social Security and Medicare on tips. And most businesses do. 80 to 90% of businesses do pay it. And the payroll service may even be aware of it, and it may even have told the client, hey, this is something you have to go, after yourself. We'll give you the information to go do it, but you have to go do this yourself. We are not going to do it for you. We are not going to reduce your payroll tax reports on a monthly basis, your payroll tax reports or the withholdings on a monthly basis. We're not going to do that. That's a liability we do not want to accept. And I've had this conversation with most of the big executives of most of the big payroll services, and they all told me that they do not want to accept this responsibility. They don't want to take the liability on. They view that as that's something the business owner has to go after. So on here, so again, the biggest part, so that up until now, up until 12/31 2024, it's been the food and beverage industry. And so starting this year, meaning on the 25 return, those in the beauty and personal care industry, nail techs, hair salons, in massage parlors and things like that, anything like that, where there are employees that are receiving tips, any one of those would qualify. So, and for those ones in the beauty and personal care, they have to do it in 25. And that's been the first time that's been available. That came into pass with the one big beautiful bill. Those were added on. Beauty and personal care was added on with that bill on July 4th. So, like I said, many of the payroll services are aware of it, but they're not gonna go after it because they view that as a liability. They don't want to be responsible for saying whether a business owner should or should not receive that credit. So the way to get the credit is that the business owner has to file this form 8846, and they have to file it if they're an S corp, they would file it with their S corp return. If they're a partnership, they would file it with a partnership return, and then it flows down to the personal. So that ultimately it reduces the tax on the personal. So they have to have a liability to be able to get it. So, but that doesn't mean it can't carry forward. So it can carry forward 20 years. So let's say, business owner doesn't have a liability, but they know they're going to have a big liability the following year. It would carry forward 20 years. So it's not like they lose it if they can't use it that year. They can also go back 3 years. So most of the firms that are going after this are going after 22, 23, 24. And the reason why they're doing that is because those years are open for e-filing as well, which means you can amend a return electronically if the original return was also filed electronically. So it gets in the system a lot faster. And what we're doing in addition, like what we do for tax recovery, is we fill out a form that allows us to receive part of that refund directly. And so we're not chasing clients. We're not like, ERTC or SETS, where we're chasing clients for the money because they got the check. We can accomplish that because they're more current returns. ERTC and SETs, we couldn't do that because of the back returns. Those were paper returns. You can't do that with a paper return. So on this landing page, I've also built in a calculator. So this calculator is accurate. And some people were asking me, how do I fill this out? So the first thing you're going to fit in here, you're just going to put, how many employees do you have? I have 200 tipped employees. Now, this wage rate, no matter what you put in here, it's not going to increase above $5.15 because that was the rate when this was established. So regardless of what you put here, 15, 15, it doesn't make any difference what you put in here. It's only going to calculate it based on 515. So don't be surprised when you put in $100 an hour and it puts $5.15 because everything's calculated on that. Because the reason is if the wage rate is less than 515, we have to build that into the calculator. In other words, they can't, if they're being paid $2.15, they're $3 below the wage rate that was set when this credit was established. So then you're going to have to say what's their weekly tips on a weekly basis? I'm going to say 300. Okay. And how many hours a week do they work? And the reason we need that is because we also need to calculate how much of this additional amount up to the 515 an hour do we need to build into our calculation. So this is 200 employees. I can dial this back a little bit, but you can see what we're talking about here. So let's say we have a restaurant it's a large chain and it's got, it's all one payroll and overall they've got 200 employees. In this scenario, 200 employees, they're all being paid, at least 515 an hour. They're getting paid $300 a week and they're working 40 hours a week. That would be $238,680 refund. And we're charging 30% for that. So as with tax recovery, I once thought, well, clients are never going to go for that. They're just never going to go with giving up 30% of that. When you tell people it's going to be 30%, we're going to take 30% of $238,680. They're like, go for it. Because I still get the 70% of something I didn't even know I had. I didn't know anything about this. You're bringing something to them that they didn't even know they were entitled to. So they're willing to give us 30% to collect something they didn't even know they had. Very much like tax recovery. They're willing to give it to us because we brought something to them. They didn't even know that's money. They didn't even know that they could get back. And this is law. It's not something new. It's just not well known. It's not gray. It's not, there's some quirk in the law. It's been around for a long time. It's just like other things, not very well known. So they do have to have a couple of things. So who can apply? Anybody in those industries can apply. Of course, they have to pay their taxes. So if they didn't pay their taxes, in other words, they're not paying their employees' payroll taxes, well, they can't get money back they never paid. So that is one basic requirement. So that's really the only requirements in this process is they have to have paid the payroll taxes, otherwise they can't get payroll taxes back. And they have to apply, it has to be employees and they have to be in one of those industries. And this is pretty broad. So food, beverage, beauty, and personal care, those industries, that's pretty darn broad. So that brings in anything in the food industry, even casinos, any bars, beauty, all kinds of, this is really widened this credit even more so. But keep in mind, the beauty and personal care doesn't come in until the end of 24, meaning for the 2025 year. That's the first year the beauty and personal care has been able to take this. Up until that, we can get the food and beverage industry going back 3 years. But for beauty and personal care, we can only get it for 25 and going forward. That's kind of this thing in a nutshell. It's not terribly complicated. All
So
we
you can't
really
start
need,
talking to people till after January.
no, you can talk to people right now in the food and beverage industry.
No, I'm saying for the beauty and personal care, they can't do
Yeah,
anything.
you
Yeah,
can. You can talk to them about them now, and we
mhm,
can start gathering the information. It's just we can't file that return until
right.
25.
There you go.
So, as far as an immediate benefit and an immediate payout to you, we won't see that till they file their return. So we can have it all prepared. Let's say if we did it right now with them, we'd still have to catch up a little bit of payroll at the end of the year. And so we'd have to like do what we need to do. We gathered the documents now, and at the end of the year, we'd also have to catch up, let's say the last 2 months, and then we're ready to go. And so they don't have to go through us. We want them to go through us. We certainly aren't going to give this information away if they're not going to go through us. But, so are they going to say, yeah, is it going to be one of those things where they say, I'm pretty sure my accountant's taking care of this? Your response should be, have you ever heard of this before? No. Have you ever filed a Form 8846 before? No. Well, then you're not taking it. You're not taking advantage of it. I mean, I know your accountant's telling you, yeah, we do that, but they very much are likely not taking care of that. You'd know it if you were taking advantage of that credit. So for beauty, personal care, for food and beverage, yeah, all the way back for years. And we go back and look at those returns, get the payroll reports from them, go back there, and we can amend those returns. It depends on where they filed. If it's a Schedule C business, then we file it with their personal return. If it's an S corp, we have to amend the S corp return first, and then it carries through to the personal return. So until we see the whole return and process it through, we won't know what they get this year, but they will get the benefit. It's not like they only get it if they may get that benefit going forward, meaning let's say they get 20,000 of it this year, and then next year, $268,000. That's a lot of carry forward. If they have a $268,000 liability, you can get all of that back.
All right, Joe has his hand up, Stephan.
Sure. Go ahead, Joe.
He's looking for the unmute button. I have a hard time too.
Go ahead, Dan. I'll
Okay.
let Joe go
Sorry.
next.
We got Joe coming in. Go for
All
it,
right,
Joe.
Go ahead, Joe.
How do we sign up for this? And is this an I Decide presentation or is this a different type of presentation?
Not yet. Not an I decide. I'm gonna be adding a explainer video to this landing page here shortly that'll explain what it is and why a lot of businesses don't know anything about it. But
Is that something we'll be able to get? We just,
Yeah.
what do we send it to a client and
Yeah.
they just click on
yeah,
it? It's
yeah, and I'm going to add one more piece to that, and that'll be when they fill this out, it'll ask who referred you to this landing page, and then we'll build in attribution into this, so that question won't even be necessary.
So you'll let us know when this thing's ready to go then.
Yeah. So you can start having conversations with clients now, but to get them, so we'll know. Well, I'll add that one line on here just in the meantime, so I know where that client came from. So it's going to be a question that is a required answer, and it's going to say who referred you to this, to this landing page.
And when do you anticipate we'd be able to get that link?
So the link it's up right now. So FICA tips tax credit, but I'll add that one question in.
Okay, thanks.
So that we know that's where that came from you.
So we
it's
have
FICA tips, correct?
What a mess.
Yeah,
FICA tips, tax
FICA
credit.
tips tax credit. That's the landing page.
FICA tips.
So it gives them information. It tells them who qualifies. It has the calculator on it. It tells them, who does it apply to, and then what is the FICA tips tax credit. How does it
Is
work?
that FICA-TIPS-TAXCredit.com, or what is it?
Yes,
Just
yeah,
FICA-TIPS.com.
FICA-TIPS-TAXCredit.com.
Okay. All right.
Yep.
Thank you.
Yeah, so the biggest thing is this calculator. So this calculator is accurate.
Okay,
All
Uncle
the- all the
Dan.
pieces built
Uncle
into it.
Dan is next,
Oh.
Stephan.
Go ahead.
Hey, Stefan. Hey, question. And I'm just somebody asked me about this like yesterday, and so you know how it is that like we do the R&D tax credits, and you know that's you have to have the thing that throws a lot of people off is they're not profitable. So you know there's no sort of research and development tax credit to go get after to capture.
Sure.
With this, because they've already paid into the system, what is it, 7.5% or 7.6?
Yeah.
Because so since they've already paid that into the system, what we're basically doing is, they were, that was already charged to them. So we're basically just recapturing that seven or a portion of that 7.6%. Am I right?
It is in respect to just like R&D. So there needs to be a liability to go after to get it immediately. So if we don't have, let's say, like I've got a client, we got $125,000 back, but in her last year, she had, I don't remember what situation was, income was lower, or she had a big tax deduction or something. She really didn't have a liability in the 24 year. So we couldn't get her a lot in the 24 year, but we got the other years. We went back to 21 because we were amending the last three, plus we were doing the current year. So
they got 20 people there. So I'm gonna go just listen. I can.
Yeah.
Hi.
That's Bill. Bill, you're unmuted. But so one of the main things that I came across with the R&D was that they didn't have any tax liability, and a lot of my reps were, submitting it, and come to find out there was nothing there to recapture.
Yeah, and that
So
is one thing that you need to look at up front. So it's not that it makes it less valuable. It just means that you're not going to see an immediate benefit from it.
Okay.
It's very much like that. It's not a refundable credit, meaning
Okay.
a refundable credit means even if you don't have a tax liability, you still get the credit anyway. So this is very much like R&D. It's not a refundable credit. You get it if there's a liability. If not, it carries forward. So it's not like you're not going to get it. It's going to carry into the next year, into the next year, and the next year. And so, but you can plan ahead. So now you've got a situation where, let's say what the client normally does is they buy a bunch of assets at the end of the year. Like, a client that's in construction, he buys a ton of trucks every year because his business is growing and he needs the write-offs. Well, one year he just doesn't buy trucks because he knows he's got, that's not a good example because that doesn't match with this credit. But let's say, we're in the health and beauty industry, and we normally buy all kinds of equipment, maybe open up new stations and all kinds of things. And we spend a lot of money at the end of the year that we can write off in Section 179. So maybe that year we don't do that because we've got a big credit carry forward. So now we got cash in our pocket because we didn't have to spend it because we got this credit carry forward and we're just using tax planning.
Got it. Okay, that makes sense.
But
Thank
yeah,
you.
in that respect, like R&D, it's not a refundable credit, which means so you got to kind of look ahead and go, when am I going to see this credit? Am I going to get it this year, or am I going to have to get it from the following year? And am I going to probably need to do some tax planning to get more of that credit and stop carrying it forward indefinitely? So it's actually a happy problem when you got that credit sitting on the books. You're carrying it forward. You can do some things. You got that credit carry forward. You don't have to spend down. There's a lot of things you don't have to do because you've got that credit coming into that one year. You can afford to take a hit on income. That makes sense?
Great. I'll pass it on to who's ever next, David or Joe. I'm not sure.
David, I think you're next.
Yeah, the question I have is, my upline is B&D and Uncle Dan. So do we need to be contractually appointed to you, Stephan, on this?
No. So you'd be
venture?
you'd be under Uncle Dan. So they're Dan. So yeah.
Yeah, I worked out something with B&D, so we're good.
Okay. Thanks.
Oh my gosh, Mark Burns, we've seen you twice in one shot. How you doing, my friend?
Yeah, I'm following you at the roulette table there, brother.
There you go.
Okay. Just a quick question. I came in late. I'm sorry, you probably already answered it, but how does that annual savings that been calculated, how does that get monetized in our hands, as the broke as the
So we signed the client signs an agreement saying they're going to give us 20% or 30% of this. And we do it a little differently than like ERTC or sets, because when we file the amended return, we also fill out a form that says this much of the refund goes here, this much of the refund goes into this trust fund. And we can accomplish that because we're doing it with amended returns that can be e-filed. Can't do that with returns that are paper filed. We can accomplish that. So it's a little different. We're not chasing clients in this example. So not like ERTC where the client gets the check and we have to
Yeah.
chase them for the money.
Yeah. Yeah, so okay, so we can set it up to come to our trust fund or a separate fund.
Yeah, we would
And
set up so the funds would come to a certain amount of their refund would come to the trust fund. So you
and
can
it's
bifurcate that refund. You can say 80% of that refund goes here, or I'm sorry, 70% of that refund goes here, 30% of that refund goes here.
okay. And we should still expect to wait to wait a bit like we did, with
It's going to take
ERC.
a little bit, but it'll get in there a lot faster than if we had to paper file, because we're going to electronically file, which means we get an approval within a couple of days electronically. They still have to process the return, but it certainly gets in the system a lot faster. It's not paper, it's not being entered, it's going in digitally.
And am I correct in understanding that the return, the clawback form that they file is fairly cut and dry in terms of the calculation? It's not, there's not,
Yep. Yeah,
we're
we
not
actually
talking about variables and judgment calls and whatnot.
no,
It's like,
no, I mean there are some variables that under 515 if they're paid, but I mean let's face it, nobody pays under 515 anymore. Okay.
right, right,
So that's not really that much of a variable anymore. And then the rest of it is just some numbers. How many employees do you have, and how many,
right,
how much do they get paid on a weekly basis, and how many hours do they work?
right,
That's the calculator right here. So they can come in here and do the math themselves and go, wow, and this is just 1 year.
right.
They can, let's say they had in the prior year had 30 employees and everything else was about the same. Well, they can do the math right there. $35,802. That's last year. How many employees?
How many years back are they going?
We can go back 3. So
Okay.
3 open years. Okay. So they have to be open. So keep in mind that every, April 15th, we lose another year.
All right.
Or if they file an extension, then we've got some more time. So it really depends on the scenario. But keep in mind, every every December 31st, we lose an electronically filed return. As soon as the IRS goes down for maintenance, when they come back, they will drop off another year. Doesn't mean we can't go back after the amended return, but now we have to paper file it. We want to electronically file if at all possible.
Right. Okay.
I think Joe was next.
Joe, go ahead.
Yeah, are they going to pay interest like ERTC did?
Yep, they have to. That's by law.
Okay.
They don't have a choice.
And what's
And keep
our
in mind that
compensation like on
calculation
this?
is from the day that was originally paid to the date. So you got 3 years out, they're going to pay a lot more interest than they would if it was the current year. But by
Right, yeah,
law,
no,
they have to pay interest. Yes.
that's
Because
been nice.
That's money the client should have never paid. So they have to pay interest on it.
Yeah, it's been nice with the ERT because I had a client that got a 1.2 million and he got 200,000 in interest on top of that.
Yep.
How do we get paid on this? What's the
It
deal?
goes into our trust fund, and then we pay out 70% to the field. 70% of the net to the field.
So okay, let's just say it's a $10,000 savings. How much do I end up getting?
Use 100,000, and we'll basically walk through it. So basically, we're going to keep 30% of the 100,000 recovery. Correct, Stephan? That's the way it works. We start with
we can use the same calculator. We can use the same calculator that we do for the private insurance. It's just lower numbers.
Can you
You can see,
go
you can
through
see
that?
what the referring rep would get because we're using the same percentage that pay out to the field. So the only difference between the two is there, that all that other calculator. So I'll have to probably build another calculator out for this because the only other variable would be the cost to prepare the amended returns.
Yeah,
That's
if you
the
could
only
do
other
that, be
variable
good. But
because
you
everything else is built into the other calculator.
you got a ballpark if they got $100,000, how much does the agent get?
I mean, typically you're going to talk about, typically, most of the time it's an S Corp, C Corp. You're probably looking at about $2,000 per year to file the returns as far as the cost. So, $100,000, 30% less, let's say $6,000 is going to go out to the field.
Yeah, when you
So
say
that's
go out to the field, what's the writing agent get?
Well, let me try to, probably should have built a calculator before this.
Okay.
I don't think I can adapt the other one. So, all right.
The writing consultant, I believe, is receiving 65%.
That
And
sounds
then I
about right.
think,
Yeah.
yep. And then I think we had the five, and geez, I don't know. Was it another? I can't remember what the other part was.
Wasn't it? Didn't
So
you
what's
increase
that?
the 10-10-5 or something like that? 10-5-5? I'm not sure.
I believe.
Yeah, I
Yeah,
think you're
thank
right.
you, Uncle
Yeah.
Dan, because that's
Yeah.
Sheldon. Sheldon built that one. Yep.
So is that 65% of the 30% or what? Just give me a number.
Yeah, and the only thing you take off of that is, let's say it's going to be $3,000 or $2,000 per year to amend those returns. So the cost of
Fine.
doing them.
So what's the writing agent end up with if the client gets $100,000?
Ballpark.
Stephan is doing his numbers right now. I can see that.
Hang on one sec.
Yeah.
15,600.
Oh,
Yeah.
okay. So that's 15% of $100,000.
Yeah.
16, just right close to 16.
Yeah. The only
So we
variable
could
would
use
be,
that as a
what do we
ballpark?
have to do? How many returns do we have to amend before we can get their end result?
I just needed some ballpark.
Yeah.
Thank you.
And what was that ballpark? I missed it.
15,600.
15,600.
On 100,000.
Right.
It's worth pursuing it, and there, like I said, there's not a lot of players out there doing this, and it's a big field, and it's gotten even bigger. So
Stephan,
you're approaching clients that had no idea that this even existed.
That's right. That's
question:
right.
Why
Go
don't
ahead.
the clients and their CPA just do it themselves? How complicated a calculation is it?
That's like the same. I get this question a lot. Why did my CPA do this? I can't answer why your CPA didn't do it, but have you ever filed that form before? No. Have you ever gotten money back from the FICA tips tax credit? No. Then your CPA is not doing it because, like other things, did your CPA do ERTC? No. Were you aware of ERTC before somebody brought it to you? No. There's a lot of credits in the tax code that, especially when you're a preparer, you've got very little time during tax season to get returns done. You don't have time for this.
And typically, those IRS forms, they can take a calculation as simple as the one you have up on the wall here and make it so gummed you wouldn't even know what you were calculating. I mean,
Yeah.
I've seen them; they're obscene.
Yeah, so we process this as, we're not going to work with clients that don't want us to amend the returns because we have no control over it. If we just give it to their CPA, that's great. My question is always going to be, if you haven't done this before, what makes you think your person's going to do it now?
Yeah.
What makes you think your person's going to do it going forward? This is not only this year, but this is the year after the year after the year. This is not going anywhere. The reason behind this credit is to encourage employees to report their tips.
Okay.
So this is not going away anytime soon.
But ain't that the whole thing? They don't want to. They don't want to report their tip.
Yeah, they don't want to report their tips. But see, by doing this, you're now encouraging, the employers are encouraging their employees to report their tips, or putting burden on them. Like, hey, that I know you made more than tips than that. You're not reporting all your tips. And there's also something new that came out in the new tax law as well, in the big beautiful bill. There's a $25,000 write-off for tips. So again, you're trying to encourage people to report their tips. Because the IRS knows that a lot of tips go unreported. So you're building things into the system, into the law, to encourage employees that earn tips to report those tips. So here, you're encouraging the employer to get on the employee to report their tips. By giving them a credit against that tip income, you're encouraging them to report their tip income. So with that additional $25,000 credit, you're encouraging more employees in 25 to report their full income.
It looks like Jim Quinn has joined us, and he has a question.
Sure.
Go ahead, Mr. Quinn.
Thank you, Stan. Hello, Stephan.
Hey.
My question is, so we're looking back for 22, 23, 24 returns, and you're looking also to possibly do the Form 8846 for the 2025 return and for returns in future years going forward. Is that what your goal is?
That is the goal.
There would be ongoing.
It's kind of like, it's kind of like R&D, or, the private insurance. Once you show them this, they're probably going to leave their person, first of all. Why didn't my person get this money back for the last 3 years? You know what? I can't answer that. Sorry, I'm sorry they didn't. We got the money back for you. But, if they didn't recognize this the last 3 years, what makes you think they're going to do this going forward? Your preparer just doesn't have the time. They don't have the time to scour your payroll records to determine this credit. They're trying to get your return. They're trying to crank it out. They don't have time for that.
Right.
That's why there's firms like us that do nothing but credits and things like that everybody else doesn't do.
Okay, great. Thanks.
That's always the common question. Why didn't my person find this? Why didn't my person tell me about this? You know what? I can't answer that question other than to tell you a little bit how the industry works. They just don't have time.
Okay, thanks, Stephan.
You're welcome.
Okay. Did you have a question, Bill? I know your hand was up there.
Yeah, I did. 2 questions. Stephan, I get ready to sell my business and I've got this aggregate tax credit sitting on the books. Is that part of the value when I sell my business to the next guy?
It is, because it stays with the ITIN, or the EIN number, technically. I mean, but it flows through. So each year that flow through is going through the S corp, and then once it flows to the personal, it's on the personal. So it doesn't carry through. Like, for an example, an S corp. Okay, C corp's a little different because a C corp is its own return, so it stays with the C corp. But if it was an S corp, it flows through on the personal return, and then it carries forward on the personal return. So if it was a C corp, yeah, that would be a benefit, because now you've got this credit carry forward.
Okay, very good. The next question is, so I work tonight, I make $100 in tips. I report it to my employer. Do I hand that $100 to my employer?
Most likely it went through the POS system, so that was already calculated into what you earned. So they most likely already know it. Because a lot of restaurants and food and beverage, they use the POS system, so they know what the tips already are.
All right. So under the new bill, I'm not going to pay taxes on my tip, but I can get credit to my FICA contribution. Is that correct or not?
That's correct. That is correct. Yes. Even though, keep in mind that's 2 parts. So one is encouraging the employee to report their report their tips. This credit is for the employer. the employer was not supposed to pay FICA tips tax credit. They were not supposed to pay Social Security and Medicare on those tips.
I got
The
you.
other
So
part of it is the ability to write off the first $25,000 of tips. Again, encouraging employees to report their tips.
well, so the last question is next year, now that I know as a business owner, I don't pay FICA. Is there any reason to do business with you if I did not pay FICA? How am I going to get a credit if I didn't pay the FICA?
Meaning if you never paid the payroll taxes?
Oh, I see. So yeah, I paid FICA under payroll, but the tip was added to my income.
Right? And they paid FICA tax tips because understand, like I said earlier on, maybe you weren't here yet, but I've talked to most of the top executives at payroll services trying to find a way to get payroll services to report it. And then because on the 941 forms, there is the ability to actually reduce the FICA tax for the amount that they were not supposed to pay. But the big payroll companies will not do it. I haven't even found a small payroll company that's willing to accept that liability.
Huh.
They don't want to do it. They'll give the information as part of the payroll reports. They'll tell them how much of the income earned by the employees for tips. They'll tell them that, but they will not do the math, and nor will they reduce the 941 so that they're actually not paying into the system for something they would get a credit. They view it as that's the owner's responsibility. We're not going after that. That's something you'd have to do as the business owner.
Okay, so this year, tax year 25 and 24, 3 and 2, the clawback. Next year, is it assumed that the payroll company is still going to whack me, or is that?
Yeah, they're going to do that to your business owner every year. They have no intention to change. They're gonna take the FICA and Social Security on all the payroll every year and say we'll give you the information to be able to go after your credit, but that is your responsibility.
So I'm
'Cause
going
I couldn't understand how does this happen when I first started getting into this. I'm like, how does this happen? Why aren't the payroll companies doing this as a service? They don't want the liability.
So I had to pay it out, my share, half of it.
Yep.
What about the employee? Is he going to get any benefit out of this because he had to cough up half his FICA or not?
Nope, that's still part of the Social Security system. It's the employer that doesn't have to pay it. The employee.
I got you. So next year, it's residual. It can happen again next year and the year after. All the employers saying,
that's
hey,
why
it's
help. Two parts. I mean, now you've added even more encouragement to get the employee to report their tips. So you gave them a 25,000 up to $25,000. You can absorb $25,000 of tip income and not pay tax on it. Again, encouraging them to report their tips. This is more about getting the employer to get after their employees to report their tips.
Yeah.
Because the employer is the one that receives the benefit from this.
Gotcha. Thank you.
So if any time in history where this is something that go after, it's now. Because the employer and the employee both have an incentive to report this. And
Stephan,
going in 2020 for the 24, 25 W-2s, they're being changed right now to report the tips. Go ahead.
Stephan, I might have missed it. I was not here on time. What do you have? Is there a kit or packet as to what I want to have in hand when I walk into that restaurant? Because I want to get it done right then and there. I don't want to fiddle around.
Well, again, probably what we'll do is we'll build a flyer of something like we'll give them the same basic information you can hand somebody. What I want to do is come up with something that if you hand it to a hostess, they're going to go, yeah, I better give that to my boss.
Right.
It's one of those, are you missing out on this? The average business, 80 to 90% of businesses in your industry don't even know this credit exists. This could be worth, the average refund is roughly $51,000 to $52,000 per. That's the average.
Yeah. So the communication has to
Yeah,
say
so
that.
you give you
Right.
something that's like maybe a small postcard kind of something that you can
Right.
hand to somebody where they get that in their hands and go, yeah, I better give that to my boss.
Hard paper, and and the boss
Yeah,
gets it
yeah,
and
yeah. And
and
something that,
execute on it immediately.
you're when somebody gives you something and you go, yeah, I better get that to them. I know it's probably sales. I know they may not be interested, but I'm not taking that responsibility. I'm giving that to my boss.
Right, right. And when the boss gets it, that he can execute on it immediately.
Yeah.
It's not
Yeah.
like,
So then
well, I
they can come
gotta.
to this landing page and they can do their own math. What did I miss out on? Let's just do the math on this year. What did I miss out on? Wow. And I can go back 3 years. That looks like I missed out on, $200,000 in taxes and they can get it back.
Yeah,
And,
let's go.
so now the question is, what do I got to give up for this? So yeah, we're going to tell them that you're going to have to give up 30% of this. I thought when I first got into tax recovery a long time ago that I thought clients would really balk about giving up 30% of some refund. I was wrong. Most of them are like, shoot, I'll give up 30% every day if I get 70% of something I didn't even know I had.
It's found money.
Yeah, it's found money, literally. If I have to give 30% of it up to find money for me, yeah, all day long.
Right. No doubt. So it's the speed of executing at it at the door and through to the decision maker that he can pull the trigger on it.
Yep.
Anything that impairs that screws the
Now,
pooch
really,
open.
after that, it's really gathering some documents from them, and we'll work them through on an onboarding and say this is exactly what we need from you. And then
Right.
we have a pretty good idea of what reports based on the different, what payroll service you use. I use ADP. Okay, try to get this report from ADP because this is the report that has all the information we need, and we need it broken down by quarter so that we have all quarters, so we know what your is for the entire year. We need a copy of your, so we'll give them a list of everything we need from them. We need the 941s, we need the payroll because we need to tie all this out. We need to make sure that they did actually pay the payroll taxes.
Right. Right.
So, and
Right.
then we're also going to do one. So we're going to in doing this, we have the ability to do a few things. One, we have the ability to get the funds by our portion going into a trust fund. We have the ability to do that because they're electronically filed returns. Let's say we're amending whatever. Let's say we go into 22 and 22 is now closed for e-filing. We can still go after 22. We just have to paper file it. So now we can't do the trust fund with that. Okay. But we still can do the other ones. So this is a little different than SETS or ERTC because we have the ability to direct where the money goes.
That's a big difference.
It's a huge difference. And that's been the biggest problem is chasing clients for
Yeah.
money.
Yeah. Yeah.
Every ERTC company out there has the same problem. Everybody's chasing people for money because you can't control it. The client gets the check.
Yeah. Yeah. Yeah.
So the other thing we're going to do is we're going to make sure that they're in compliance, meaning they actually paid their payroll taxes. We want to see the transcripts knowing they actually paid it. We don't want to find out later on, that's great, we think we're getting this money back, but they never paid the payroll taxes.
Hey, Stefan, I was putzing around here. It's kind of neat what you've done with your URL. You added an S at the end of tips.
Yep.
FICA tips with an S, taxcredit.com gets to your page. If you don't put the S in there, it goes off to Blue something else, some other company out there.
Yep. Yeah, you're going to find I own quite a few of those that are just, this one kind of surprised me that I could get it. It's like, oh yeah, okay, it's there, available, done, paid for, give it to me. So I have, there's other ones I have, cost seg, there's other ones. Sometimes I have to add a legacy in front of it because somebody else already has it. But you're going to find if I can get it, yeah, I'm going to make it very convenient. So if somebody's searching for FICA tips tax credit, comes right here.
Hey, Stefan, so you can direct the money to go to you and then you pay the client?
No, the other way around. So what we do is we bifurcate the refund. So 70% of that refund would go to the client, 30% would come to us, what they agreed to pay.
Do you have power of attorney? You need them to sign a power of attorney?
No, we actually do that
form.
as part of the amended return. We will get a power of attorney from them because we want to find out that they actually did pay the payroll taxes. Or the other thing is we don't want to find out the hard way. They already applied for this. So that's the two things we're going to be asking for. So we will fill out the 8821 so we can pull information. But we're going to fill out, there's a form that we fill out as part of the amended return that basically directs where the refund's supposed to go.
Yeah,
Is it about the same amount of work as ERTC?
No,
For you guys?
it's actually easier than ERTC.
And how long
Calculation's
has it been
easier,
taking the
it's not
IRS?
so much broken down. It's somewhat similar, but not nearly as intricate as ERTC is.
How long has it been taking the IRS to pay?
Typical amended return is 16 to 20 weeks of that, and we just get it in there faster. So we avoid the whole mailing. It goes into this is a story I tell people when they're asking me like ERTC. I said, you remember the big warehouse from Raiders of the Lost Ark? Remember that big warehouse where nothing was organized, nothing was cataloged, nothing? That's what I envision ERTC to be. It's just this giant warehouse. We avoid that completely. It goes in electronically. We know when it got processed. We know when it was accepted.
Do you have enrolled agents so you can call up the IRS and talk to them directly?
Do we have what?
Enrolled agents.
Yes. Yes. A big tax resolution is a big part of what we do. So just so you know, that's a big part
Obviously,
of what does.
The return is going to be sent in by a certified CPA.
Yes.
Okay.
So
thanks.
See, that bifurcation is a good selling point. It protects the client too.
Yeah.
But
well, they don't even have to think about. We don't. First of all, it's a big selling point for us. We don't have to chase clients for money. 30% of that comes directly to us.
How about us dealing with CPAs that have a group of clients like the tip paying clients?
Could we? The client CPAs are always good candidates. I mean, once you get them past the hurdle of, I guess I got to tell my client that I missed this. I mean, the easiest way to explain it to the client is to go, you know what, there are so many credits in the tax law that I can't be aware of all of them. I can't keep up with all of them. That's why there's firms like Legacy that do nothing but this.
Right.
That's
so
why.
Yeah.
Right. So we got to amend our return. So are you going to complain that you're getting back, 70% of something I missed, or do you want to just go for this? So it's CPAs very much like, private insurance. They're good candidates for clients. Yes, they're going to be asking that question. Why didn't you bring this to my attention? Well, once you get past that, then would you rather have the money or not have the money? I brought it to you by telling you about these people. Okay. I'm doing a good thing.
I'm not sure that they would want any VIG from us either necessarily, because they make their game.
There are restrictions for CPAs
That's right. They
receiving
can't.
commissions. Yes.
Yeah.
So CPAs have to work off. So this is something new that's come up, and the AI CPA is signed off on this. If you receive a compensation based on a return on investment model, then it's acceptable. Because if not, you're going to get yourself sideways of the Board of Accountancy. And you don't want to get sideways of the Board of Accountancy.
You mean taking a VIG or a piece of the action?
Yes, taking a direct commission based on something that you did for the client. There's very specific rules on when you can do that. And one of them acceptable reasons when you can do that is when it's in the client's best interest and you have calculated that and you've squirreled that number away somewhere. Why is this beneficial to my client? Because it's a good return on their investment. That's why I did this. I can show that it was in the client's best interest to do this for them.
Okay.
Stephan, I complete this form and submit it. How do you know who it came from?
This particular one, I'm going to add one more piece onto this. Initially, I'm going to add one more question onto this. Who referred you? And then beyond that, we're going to set up attribution. So you'd have your own landing page. It's just going to be the same thing with the slash, your name after it. So we know where it came from.
Okay, thank you.
So irregardless, even the client doesn't say, it doesn't put your name on it. We still know it belongs to you. You're the one that gave them that landing page.
Okay, thank you.
Stephan, this is Jim again. Will we have the ability to track the progress of our clients also?
Yeah, we're gonna build we're gonna build our own back end so that yes, you'll be able to see where we're at on. So it'll be able to tell you where we're at in the process on this client. And if there's something that's needed from the client that you could facilitate, yeah, we're gonna let you know about that too. Hey, hey, we've
before we
asked
have
the client for these payroll reports, we're not getting them. We would suggest that you reach out to your client and ask them and say, hey, this is not going to happen unless you cooperate. It's hurting both you and I.
And what's the time frame do you think for this to occur so that we'll be able to do this tracking? Do you have a time frame on that?
Yeah, I'd say we're within the next week or so. We're going to be ready to go. I mean, landing page is built, so it's just building some attribution into it. I can easily add one more question to this for right now, so that when you give the client, then add on one, and I can make it a required answer. So they have to. Did somebody refer you to this landing page? Yes. Okay, who was it? So that's the initial, and we get the attribution built into it. Then you're each going to have your own landing page, and then when you refer that client, we'll know where that client came from.
Move over, baby. Get up. Get
But
up.
you're also
Do you
going to
have a
register
number?
that. Yeah, keep in
do you
mind
have
on your back end, you're also going to register that client
Get down.
also.
Get in your bed.
Do you have a minimum number of employees?
No. I mean, there's the minimum number of employees, maybe 10 plus, probably something. You probably don't want to pursue companies that have a low number of employees.
Well, you got a number. I mean, what should we not bother
I would
with?
say stay above 10.
Okay, thanks.
Helen, do you have a question?
I do. I'm sorry I came in late. I had another meeting going on, and this was a meeting I didn't want to miss because my son owns 20 restaurants in Chicago.
Nice.
I know.
Let
I'm
let
like,
me ask you this question. Have you ever heard him mention this?
no, I mean, I know
I'm
that
telling
because
you. I
I'm
am
going
telling you
to,
that 80 to 90% of businesses don't even know this credit exists. And it's not like they're not entitled to it. They are entitled to it.
and their accountants aren't doing this or anything, or
There are some accountants that are specific to certain industries that are more in tune with this. There are accountant and accounting firms that deal mostly in the food and beverage industry. They're more aware of this. But the average accountant, no, they're not even aware of this.
okay. So my son's a smartass, and I love him to pieces. But mom, I'm his mom.
Yeah.
So what would be a good how could I open this up so he'll say, "Who, mom? What are you talking about?" What would be something that how I could approach him about this tax credit?
So one thing I want to ask him is are you aware that you're not supposed to be paying Social Security and Medicare on your employees' tips?
That I think has been a law, though. They changed that, though, right?
No, the food and beverage has been around a long time. Recently we added the beauty and personal care. That came in at the end of 2024. So for the 25 year, we add beauty and personal care. The food and beverage industry has been around for a long time.
Okay.
Right.
So this credit's been around for the food and beverage industry for a long time. Just like I said, just added the health and beauty care. They can't file for the credit until 25 return. We can calculate it. We can get the last 2 months and then be ready to go and tell them exactly what their credit's going to be. But until we get to the end of the year and get their payroll information, we won't know for sure.
So this is the tax on tips. This is the one that because I know that my son was in the news in Chicago.
Different. So there's two parts. There's the credit for up to $25,000 of TEP income. That's different. That is encouraging employees to report their income. This is encouraging employers to go after this credit, in turn, getting after their employees to report their income, report their tip income. Both of them are encouraging employees to report their tip income. This is what this credit's been around since day one. That was what it was created for, to encourage employees to report their tip income. Because IRS knows that's a huge problem. So they built two parts into it. One, to give them the deduction on their personal return for up to $25,000 worth of income on tips. and it's going to be reported on their W-2s for this year. That's one part. This is for the employer. This is an employer credit, not an employee credit.
Okay, this is employer credit.
That's right. This is to get the employer. The employer can go after this money.
Okay, so the employer credit, can you, and I'm sorry, I'm not trying to be dumb or anything like
No,
that.
it's good
But because I
question.
came in a little late, I just want to, I'm sorry, everyone, and this is the employer credit for the tax on tip?
Yes, so the employer is not supposed to pay FICA and socials, FICA and Medicare on the tips of the employees. Not
I get
supposed to
it,
pay
now I
it,
get it.
right?
Okay.
But what happens is in the payroll services, they don't do the math. They won't do the math. And I've talked to most of the executives at large payroll services, and they're telling me that the reason we don't do it is we don't want to accept that liability. We view that as a problem for the business owner. They're supposed to go after this credit, not us. We're not supposed to do this for them because if we start doing it for them, now we're on the hook for whether it was correct or not.
I see, like on the, when people do credit card charges and they put the tip right on the credit card charge. So that's
Most,
the part that is going to be included in the
yeah,
wages that they're going to be getting their tax on. It's a
yeah,
smaller
yeah.
amount,
You're
but
going to
it
see a
adds
lot
up.
more businesses go into POS systems because now they're going to be required to report that on the W-2s.
Mm-hmm.
So
Okay.
it's
And
going to
this is,
get easier to gather the information to do this work, not harder.
I see. So not only beverage, it's also beauticians and stuff with their
That's right.
tips.
Beauticians, cosmetology, yes, all of that. Also nail techs, all of that. We brought all of that in end of 24. And for the 25 tax year, they can report that credit on their personal return or their however it flows through. So let's say they're doing an S corp return. It goes through their S return first, and it flows through on the K1 to their personal side. It ends up on the personal side. This is a credit that benefits the business owner.
I get it. Now I
So if
understand.
your
Thank
son's
you.
not reporting this, he's missing out. And if he's got quite a lot of employees,
He
it's
does.
probably a big number.
Oh, I'm sure, and I'm sure he's very on the up and up. I mean, he's got when 20 restaurants, he's, it's computerized. I mean, it's not like he
So,
could
so ballpark, what do you think how many employees do your son have?
probably around 600.
600 employees?
Because he's got restaurants all over.
Yeah. You seeing the number on my screen?
Yeah.
That's 1 year. All the wages are average, they're all going to be paying more than $5.15 an hour. That was
I want to
established
take
a long time ago.
Can
Now
I
we're
take a
assuming
picture?
that employees they're being paid tips weekly, 300 bucks a week, and they're doing on average 40 hours a week of employment. So if some of those numbers change, but 600 tipped employees, that's $716,000 your son's missing out on.
Yeah. Okay.
Now, the question is, does he have that kind of a personal liability? If not, then we carry it forward. But he's going to be a happy guy, especially when he's got a credit sitting on his return. You can go out and purposely earn some income or not, take a bunch of tax deductions because you got this credit. I mean,
I
from a
love it.
tax planner standpoint, that's a happy problem. I could tell the client, guess what? You've been talking about selling your business. Now's a good time to sell it. You got this big old fat tax credit.
And he cannot personally do this directly with the IRS. Say,
Oh, he
hey,
can. Any type of a tax deduction or tax credit or tax planning. Of course, if the client knew about it, yes, they can do it themselves. There's nothing stopping them from doing that themselves. The question is, do they know how? And then 70 to 80 to 90% of businesses don't know how, don't even know it exists.
so they would need to give us a census of their employees. Is that what he has to
Yeah,
do? It's the
yeah.
same
So
thing, almost like,
yeah.
okay.
So in some respects, it's very similar to the information we had to gather from the payroll services for ERTC. Yes, but there's one more thing that we have to see. We need to know of the income that was received, how much of that was for tips.
Okay.
We need to know their hourly wage. We need to know how much they received in tips. So we need it all broken down in a certain way so that we can do the math and tell them what their entire credit for the year is. And then we prepare the reform. Now, we're not going to give them the form. It's part of our system to have it, but we keep that form for what we're going to amend. We're not giving this away.
No. How much do we charge for this?
We charge 30% of the refund. Which I don't, you came on. I once upon a time, I've been doing tax recovery for a long time. And a long time ago, I used to think that clients are never going to pay 30%. Yes, they will. If you tell them, hey, I've got $716,000 for you, all you gotta do is you gotta give up 30% of it to get it. Would you do that? Yeah, all day long. All day long. I didn't even know I had this. I didn't know I was entitled to this. Yes, I'll give you 30% if you can go get that. Knowing that you're not even going to get paid until I get paid? Yeah, I'll do that.
I'm happy I met you, and I'm happy that I was invited on to come here. This is
Yeah.
wonderful.
You can be huge for your son. Huge.
Yeah,
Huge.
absolutely.
And I guarantee if he is getting this kind of money back, he knows other people that are doing the same thing and are entitled to the same thing.
He does.
Yeah. Yeah. So he could be a good rep for you. You could put him under you, or if he didn't want to do the work, and he could just point you to the right people. I mean, do the math. Let's say it's 16%. You get 16% of this. Huge. For helping somebody out. Showing them the way to get the money. Huge.
Love it. I'm excited.
Yeah.
I just
Yep.
need.
And also, hey, Helene, how you doing? She was also on, I know you caught part of our Tax Unicorn ER3 webinar. So between the two, a way to super fund a Roth, a way to get some money back, into your pocket from this. Stephan has the hot programs.
Yeah, so we've got more coming out for you guys. So cost seg, R&D, there's lots more coming out for you guys. For me to get behind something, I need to know it's solid. I know we can do it at volume. Otherwise, I don't want to get involved in it because I don't want it blowing up on me. So I need to know it's systemized. I need to know that it's easily calculable. I need to know the process for getting reps paid has to be there and it has to be solid. Otherwise, I don't want to get into it.
Right. How soon do reps get paid?
So typical turnaround for any kind of amended return is 16 to 20 weeks. But on these returns, because they're 22, 23, 24, and soon 25, we can electronically file the returns. So now we'll lose 22 when the IRS goes down for maintenance. When they come back, we'll lose 22 for e-file. That does not mean we can't amend that return. We just can't electronically file it anymore. So the reason why that's important is because in an electronically filed return, you can direct where the refund goes to, including a financial institution. So we can put the money in our trust fund. So we can say 70% goes to the client, 30% as they agreed goes to the trust fund. Expenses get paid out of it, and then the rest goes to the field.
And you can build a team, Helene. I know you're a good team builder.
Yeah, your son would be killer for this. I mean, if you get this kind of money back from him, he's going to be shouting at his friends. Dude,
he will be. He's part of an association. He is big.
He's going to be out there going, you got to do this. You got to talk to my mom.
Right. Well, we may need to have a meeting with him, but
I didn't even know this was real.
Yeah,
didn't even know this was real.
Yeah.
Okay, Bill Sweeney, did you have a question? I saw your hand up.
Yeah, and I might have to go offline further with this, Stephan.
Okay.
So when it's time for me to receive my commission, are you able to pay my nonprofit trust rather than me personally, even though I'm registered as the human being, or do I have to register my trust as the rep? I have an unincorporated nonprofit association. All my income comes to that. Now, if it did come to me in the form of a 1099, I can turn around and donate it to my trust. My question is, can you pay my trust directly rather than in my name? Is that something we can talk about later?
Yeah, let's talk about that off.
Okay.
All right, I see Michelangelo Casanova is on here. Mickey, how you doing?
I am well. How are you guys doing?
What do you think so far? Do you like what you're seeing?
Well, I got on late, but Jim and I have been speaking about it for the last 3 weeks. I'm gung ho. I used to live in New York City, so that's the first place I'm going. I'll probably go up there for about a week
yeah.
straight.
Oh, yeah. Yeah.
You know,
So
so
again, it's a huge field,
yeah.
and it's gotten even bigger. As we
Listen,
add the health and beauty
I know servers that make 6 figures a year in certain restaurants. So
Yeah. Yeah.
I mean, and I know the restaurants. So
Yeah. So now you're in this respect, you're going after the owners. So the employee, the employees also have an incentive this year.
yeah, it's exciting. I'm super excited, like Helene
Yeah.
is. I
Yeah.
mean,
This can be
I've been
huge.
waiting for this and waiting for it. And I'm like, Jim, ask
Yeah.
Stan what's
Yeah.
going on. He's like, just be patient. I said, I'm too young to be patient. I
Yeah,
can't. I
no,
gotta
so
go.
this
I
can
want to
be
get this
huge for
going.
you.
Yeah.
You can be talking to them about multiple things. You can be talking to them private insurance. You can be talking to them about this. This is just, hey, are you taking advantage of this? Like I said, what I want to do is I want to build some kind of a flyer that if you handed it to a hostess, the host would go, yeah, I better give that to my boss. I could really get in trouble if I don't give this to my boss.
Stephen,
Stephan,
for
go ahead.
keeping, so for people, like, I want to bring, so do they have meet with you? Who do they have a meeting with? Because I'm the connector. I'm bringing people to this. Would they have a meeting with you about this or what?
Yeah, I'd like to have an initial meeting. There's going to be a few minor questions. It's going to be, well, are we paying the payroll taxes? Yes, we are paying. And what payroll service are you using? Those kind of questions. But it's just really, but probably by that time they're already probably done the math. They already know what they likely could receive based on, this right here.
So there's going to be a form that they fill out, and then, I mean, how is this?
So you can direct them to this landing page. So this landing page will tell them about what this is, who qualifies, and then allow them to do some math. So that's where I did this calculator right here to show you what your son potentially could get back. $716,000. That's how I did the math. I just plugged in 600 employees. They all make better than $5.15 an hour. They're making $300 a week.
Exactly.
And then there's 40, they average, on average, they work 40 hours a week. That's how I did the math.
So it's almost beneficial when servers get paid in cash on tips because then it's not really shown for taxes.
It is, but again,
Not for us, but for
it is, but that discourages them to report their tips. This is all about getting them to report their tips. So we've built in two incentives. One, we gave them an incentive on their personal return to report their tips, and this gets the employer to get after their employees to report their tips because they are the ones that receive the benefit from this.
Yeah. And if they don't, if they get older and they need to get Social Security, if they haven't gotten any Social Security collected, they're not going to get bupkis, so
That's
that's
the
why
downside of not reporting your Social Security, that your income, and you're having your taxes taken out for Social Security and Medicare. Yeah, that's the downside of not reporting your income.
Mhm.
Helene, I'll email you the link to this.
Thank you. No, this is I see such value and this is exciting.
Yeah, especially if you're in like you said, New York. Hello, probably a restaurant every, at least at every block.
Or especially out in Vegas.
Yeah, for
Do we
sure.
know anybody in Vegas?
I know lots. And Chicago, that's where I'm born, in Chicago.
Oh, there you go.
And Los Angeles.
There you go. All right, Ramon. That's right. It's everywhere. Okay, guys.
And don't be surprised if you start
everywhere.
talking to people and business owners and they look at you like, I don't know what you're talking about. Well, or my CPA is taking care of it. Let's find out if that's true. Go on your tax return and tell me if you see this form. If you don't see this form on your tax return, you're not taking advantage of this. If you don't see an 8846 on your personal tax return, you are not taking advantage of this. So go figure it out for yourself. If you don't see that form, guess what? Your CPA missed it. And it could be huge. And guess what? Beyond 3 years, it's gone. It's gone.
Today's a day to smile.
Yeah.
Yep, it is. And what Stephan and I have tried to do, Helene, basically is, is offer what we call door opening programs for us to get in. I know you're part of Dreams. Stephan and I are part of Dreams. We've all kind of been in the same places, but it's nice because we're offering a few things that other people aren't. Our ER3 program, nobody has it. FICA tips, yeah, a couple of other people have it, but they're not as good as us because
No.
Stephan is actually doing the work, not farming it out. Okay, on this.
I
program.
love it. You
Yeah.
know what? I just want to share with you. We're all independent brokers, okay? So we want to pick and choose what is going to benefit the best for our business owners and where we're going to make the most money. I am me. I'm Helene. And so I am deciding what's going to be the best for business owners. And I got to retire sooner than later, or not retire, but
Right.
have retiring income so I don't have to worry because life throws a lot of twists to all of us that we're not unexpected things happen. So
Let me draw a map for you to retirement. Do this, make a boatload of money, and put that in your own and private insurance company. And the bulk of that going into your Roth. That's your path to retirement. So not only what we're showing clients, you can utilize that yourself, and you should be.
Aren't you glad I called you last night, Helene?
Dan, I'm going to hug you when I see you for sure.
I have a question because I just got on. So I actually have a few of them. So I'm super excited. I've been on Jim Quinn. I think, every other day for the last 3 weeks. Jim, what's going on? Talk to Stan. Let's get this going. Come on. Or let's start a class. Let's be ahead of the curve. Let's figure out everything that we need. So as soon as they give us the go, I'll go right to New York City. So with that having been said, when do we start?
We do that now. So with the volume,
Okay.
we can handle the volume, so we can get going. The thing is just to make sure that we're identifying clients. So we need to keep track of clients, who referred who, so we can keep track of it. That's all. That's the important thing.
Okay.
Yep,
I don't want to, I don't
We're
want
gonna
to.
do. We want to do. Uncle Dean and I talked about it. Michael Casanova, you can probably help us with this too. Is we want to do like a quick AI video.
Okay.
Okay, I know you're pretty skilled in a lot of these areas.
Yeah.
So that we could, they have the AI videos with, gosh, we've seen a lot of them that would just kind of describe it really quick. I sure as hell am going to make it. Stephan is too busy. We need to just get an AI one done, right, Stephan? Pretty quick, easy.
Yeah,
Maybe
I've got one in the works right now for this.
Oh,
So
awesome!
I call
Wait a
them-
second. Talk
I call-
Fusion. Who's got Talk Fusion here? Do a video with Talk Fusion explaining what this is. That's a great tool.
Yeah,
It's you. It doesn't have to be AI. It's you.
yeah.
We're excited to share something so powerful to help restaurants. I have Talk Fusion. How many of people here have got Talk Fusion?
And keep in mind that targeting certain type of industries on LinkedIn is not difficult.
No.
You can specifically target just businesses in these industries.
So,
you
Michelangelo,
start a
the answer is
dialogue,
we're ready
typically-
to go. We're ready to go. You basically just when you talk to them, we're gonna, we'll do the little flyer that we talked about. Whatever, we're gonna have just like a little intro video that you can kind of send out for it. But we're ready. This is ready to go right now. You can start talking.
This
to people
isn't
now.
this isn't something that we haven't been doing. So we've been doing it. So it's not something that's brand new, it's our first day doing this. We've been doing this. As Legacy, we've been doing this.
And now for replicated websites, are each of us getting a replicated website with our name on it?
Yes, so you'll have a
could-
version of this, it'll be specific to you.
And how long does that take? We sign up today and it's up tomorrow, or
So we should have that in the next couple of days. I just gotta make
Okay.
sure that we've got tracking down well.
And then lastly, well, I know Jim will educate me about what kind of like a thorough training on everything, familiarizing ourselves. I'm all about that, learning everything I possibly can. So I go out there and I'm not like, and then just have them sign up, right?
Yeah,
Thorough
so it's
training,
really just
hopefully
asking,
this
so,
week.
again, I want to design this so you don't have to be the one that has all the expertise. So your responsibility is to refer someone. That's one thing I like about tax prep advocates is just it's a referral business. You don't have to be the expert. You just need to refer a client and give, wet the whistle, that elevator pitch, get them excited about it. Did you know this? Did you know that 80 to 90% of businesses aren't aware of the FICA tips tax credit? The average refund is $52,000 a year. Boom, mic drop.
Yeah, that's awesome. And then also for everybody, as you guys know, I work with computers and stuff. So I could also make follow-up animated video. Like, so you want to do a flyer, send me your flyer, Stefan, when you're finished, and then I'll
Okay.
animate it so it grabs people's attention.
Nice.
All right.
Awesome,
So
Michael.
let's do that, and I'll make it for everybody. Everybody can do it. And then also I'll make a text flyer as well. So just follow up. You know, the trifecta, right? Email, phone call, email, text, phone call, email, text, phone call, email, text.
Okay.
Just get them on board.
Love it. So you're the
But I-
Casanova, huh?
Yeah, you know who you sound like? I don't want to get off topic. You sound like the Doug's wife from King of Queens.
Oh yeah.
Yeah,
I've been told I
exactly.
sound worse. No, I'm joking.
No, it's exactly who you sound like. When I look, I had to look twice. I was like, is that her? But yeah, all right, that's perfect. I'm ready to go. I'm ready to go. I'm ready to get this thing going. I've been ready for 3 weeks, so
Yeah.
Mickey, when you come to New York, give me a call. I got a table at Rails. We'll go see some of the boys, you know.
oh, absolutely.
You
Yeah,
know?
I'm actually going there for Christmas with Martin Manila. He's a high-powered attorney, a good friend of mine.
Yeah, yeah.
He owed me dinner there since last year, and I said, Marty, it's time to. I'm cashing in on that because is it
Fine
still
there
a
for
3 year? Is
Fine
it
there for
you
Christmas,
really
too.
can go there, Mark?
Well, the last time I had dinner there was with John, a few people. John with Bruce Cutler, I think he died recently. John Gotti's attorney.
Okay,
It's a good restaurant, you know, and I've been there for a few times, but you got to have a table. You don't
yeah.
get.
Or else it's a 3 year waiting list.
I just soon go out in the Queen. No, you go out to Queens, little places where the crews meet.
Yeah.
You know, you can have a little party. You know, it's a good time
Yeah.
at Christmas.
Yeah. Well, I'll take you up on that offer. I'm ready to go. So
I'll be there
up
All
there.
right,
Trust
guys.
me. I used to live in
Guys
Queens.
and
I used to
gals,
live in Queens and Brooklyn.
we're probably gonna wrap it up because we're at 4:20, but this has been a wonderful, wonderful meeting. So we're gonna wrap it out. I'm gonna send the site out again, a little bit more information out to everybody, probably tomorrow. I appreciate everybody just coming over and so forth. A lot of folks came from Uncle Dan's team. Bill, thank you, and just anybody, whoever you got here, reach out to the person that invited you. If I don't get to you directly, we'll make sure that it happens. I'm going to have Andrew just, if you want to just stop the meeting now, Andrew, make sure you send me the recording because everybody's going to be very anxious to look at it again, especially Helene.
Oh, I was just gonna say, can we share phone numbers? I am like so excited about this. I would love to talk to Mr. Casanova. I would like to talk to, I mean, I just have so much to talk about. Oh my gosh, as you could tell.
And I would like to, Mark, if you want to, I sent you a text to get
I
your
see.
phone.
I see. I'm trying to take I got to take a picture of it real
Yeah,
fast.
go ahead. Yeah, give me a call. We'll definitely go up there. So I'm going to be up there. I'm going to be up there 3 days out of the week. So
I don't have the number, Mike. I don't.
you
I lost
got a pen?
it.
You have a pen?